Hello and welcome to this very special interview here on Money Paathshaala. Joining me today is a founder of a startup who is trying to do something very disruptive. Akshar Shah, founder of Fixed. The name itself sounds really interesting, and I'm personally very keen to know from him what he's trying to do in the whole investment space. We are a heavily saving oriented society, and we all need to move towards investing one step at a time. A lot of changes have happened, a lot more are needed. Akshar, it's a pleasure talking to you here on Money Paathshaala, and it's great to interview someone who's so much more younger than you. So I feel much better. But
No,
my
uh, thank you so much, Vivek, for this opportunity. I think it is a great opportunity that I share my views and my insights, little insights that I have with you and through you to your large following as well. And so very excited, Vivek, to be part of this
yeah.
exchange with you.
Thank you, Akshar, for taking time out. My first question, let's get started with trying to understand what fixed is all about. I mean, I have read, what you're trying to do, but maybe for the viewers, I found it different from what many others are trying to do, who are either trying to give loans or trying to create online buying platforms. But what is fixed all about, if you can tell us?
Absolutely. So, Fixed is coming out to solve a very simple problem. And what we identified is that the whole journey of investors and savers in India starts with their own bank account. And after their own bank account, it moves to the first step of their own bank fixed deposits. And what we identified is that if in India, we are at a very good equity stage right now and the India growth story, but we still have about 5 odd crore active demat accounts. But on the other hand, we have 35 odd crore FD holders in India. So what the gap that we kind of identified is that there are a lot of people trying to invest for safe investments that don't lose capital. The risk aversion is still very, very high. And that is why the first go to is their own bank account and their own bank fixed deposits. If this is such a large base of audience in India, we are trying to make them take a little better step by saying that if you have been so comfortable with fixed deposits, we are giving you an opportunity to do a better fixed deposit. We are giving you an opportunity to unlock access across fixed deposits. If we look at it in a very simple way, what we are doing is solving for the piece that you can now choose the FD of your choice across banks and corporates and not be limited to your own bank and your own bank's fixed deposit. It's the first step, perhaps, that the user can feel or the consumer can feel comfortable with, and also get their first step for doing a better saving and investment.
Hmm.
So at Fixed, we work with multiple banks and corporates and unlock their fixed deposits digitally with 100% paperless journeys and without the need to open any savings account with these banks. So we center around this, we are solving this problem first and then wanting to solve for the larger, safer investment ecosystem problem.
The only trouble with the fixed deposit is about which most planners would say that I mean your point is very well taken. The fact that there are a large number of people even today in our country who are not financially literate, who do not understand risk, and without doing so jump into financial instruments and suffer losses. And while that effort is going on in educating them, so it's very interesting that you're trying to within the fixed deposit market give the better option, because one sees, especially some of the new age banks are offering way more than the bigger banks. So how do you go about choosing which is the best or the highest return? And when you say I don't need to open an account with that bank, how does that work? If you could tell us a little about that.
I think investments is again all about risks and return. So even an extra return that we are providing by saying that we have a better fixed deposit comes at its own cost, which I think our consumers must understand, our users must understand. The whole platform that we are trying to build is almost an enabler for you to decide, some marketplace for you to decide where you feel comfortable with taking the risks and for that getting the returns. So let me explain you how the process happens. Say, for example, Akshar Shah has been banking with State Bank of India and perhaps with HDFC Bank for a long period of time. And my money is lying in FDs of SBI and HDFC. Perhaps it is small amount, perhaps it is larger. What we try and tell at Fixed is that you've always done FDs. You are comfortable with that prospect. But when you come on our platform, we give you options that are at least 0.5% to 2% better than your own bank across different tenures. So the first thing that we do is educate users that there is possibility and access of better returns in fixed deposits as well. And then we give them options across larger private banks, small finance banks, as well as corporates. We educate them more that while this return is coming, what are the kind of things that you should be looking for when you do your fixed deposit? We also give the right messaging in terms of whether the insurance of RBI of up to 5 lakh rupees is applicable on that particular fixed deposit or not. And then what we are doing is unlocking that access. In a very simple parlance, today, if you look at any other investment asset class, Vivek, it is unlocked. For example, we never say I'm only buying HDFC mutual funds. I buy HDFC's large cap, Axis mid cap, and maybe Parag Parikh flexi cap. So the AMC industry is unlocked for us to kind of take our own calls and actually take the best of all worlds. But the largest investment asset class in India, or the largest pool of money in asset class in India, which is fixed deposit, is still locked. So all we are doing is unlocking that access for you to say that, hey, I like that 1 year FD of a particular bank, which is giving about 0.5% better than mine. As far as the journey is concerned, we do a complete digital 100% paperless journey, wherein with your onboarding, which is Aadhaar and PAN, and a small video KYC if applicable, we open your deposit with that particular bank where everything is taken care of by the bank. The onboarding happens by the bank. The FD receipt is issued by the bank. Your receipts are issued by the bank. And your money is also directly going to the bank. What Fixed is doing is only acting as a technology interface to help you connect with any bank without having the need to open a savings account. When I say that we don't have to even open a savings account, it means that money will flow out of my SBI account. Perhaps if I want to open a Kotak FD, I will book an Kotak FD from my SBI account. Whenever the maturity comes or I want to break my FD, money will flow back to my SBI account. I don't have any savings account with Kotak Bank.
One of the big concerns, with FDs has been the fact that, on a post-tax basis, they probably don't even end up beating inflation. While yes, you're absolutely right that at least the existing FD holders, and and both you and I know there are many people who are risk averse and they probably should not be in equity at all. But how do you feel that, right now, of course, rates are elevated, but do you feel that uh, the ability to beat inflation and actually also enhance your returns a little bit is also critical?
It is definitely very, very critical, Vivek. And I think you are addressing or asking for a very critical point that will FDs beat inflation? Should FDs be part of the portfolio health? And I truly believe that your investments are like it's like eating food, right? You need to have the right carbohydrates, you need to have the right proteins, you need to maybe have the right fats. And that is what we say always in investments, that you have to follow an asset allocation. And within asset allocation, you will put some money with high return and high risk opportunities. You will put some money in low risk, low return opportunities, but you will have to spread out your risk as well as then put your expectation of return. Now, depending on the risk aversion of a person, I might like more carbohydrates because I want less proteins, or I might like more proteins because I have some goals that I want to achieve with that. But all should have a balanced diet. That is for sure. Within that same line, what role does fixed income actually play? That becomes very critical question. And most importantly, it is for stability of portfolio and for addressing your need for a lower risk and more certainty in the near future. What is there is a reason well what that I feel that there are 35 crore FD holders in India. One, I think it is very true that financial literacy is a little lower in India, much lower in India than we like. And that is why people have stuck to an option that only they've understood and they've not understood the other options very well. I think that trend is changing and rightly so. More people should be aware of more investment options which are better and are there for creating wealth in the medium to longer run. However, there is a second problem also. That is the reason why there are so many FD holders. That if you look at the disposable income and savings level in India, the horizons that every customer and investor has, the rather broad ecosystem of investors has and savers has, is limitedly short. They are not able to plan for 20 years and 15 years. They have next goals in the next 2 or 3 years. And because of lesser money, as well as a smaller goal and a smaller horizon of investments, the risk aversion and the willingness to take risk and the ability to take risk is much lower. And hence they stick with more certain investments, more certain predictable return investments, even if they are at the lower return because they are more concerned about protecting their wealth. That is where we are wanting to come to, that we understand that you have short-term goals. We understand that you will not be able to take risks with your portfolio for a certain amount. And we want to help you better that return. We want to help you get better opportunities for that. Of course, even though I'm the founder of a company that is enabling deposits, I feel that if a person has any horizon above 5 to 10 years, they should not be investing their monies completely for that 5 to 10 year in fixed deposit. They can have a small portion of it, but they should not. This is a larger ecosystem of investors that are wanting money in the next 2, 3 years for safety, protecting their capital, but also a better return. We are trying to address their needs.
No, you're absolutely bang on. I mean, short-term needs, there is no question of being in a debt asset class, asset allocation, critical. Debt has a major role to play in that. But how would you describe the alternative, which is also being built? Of course, nowhere near FD at this point of time, and maybe you will go into that space as well at a later point, but the whole debt mutual fund category. So while your point on the importance of debt is a no-brainer, it's very important. Of course, a lot of retail people don't understand debt mutual funds. They look at mutual funds more as equity vehicles. And now that this tax advantage, so to speak, has also been taken away and they are at par with FDs when it comes to taxation, how do you see an FD versus a debt mutual fund?
So, Vivek, I feel that both are very important and both serve a very different purpose. And our retail investors and ecosystem must gradually understand and come to understand of the debt mutual fund space. Again, this particularly I feel is a problem of less financial literacy more than anything. Because if you look at the debt mutual fund market also, it is perhaps today less than 5% of the total bank fixed deposit market. But it is solving for a very important purpose, even if there is no tax advantage and arbitrage to it. It is solving for good liquidity. It is solving for well diversification. It is solving for different categories of tenures that you can go into or different levels of risk that you can go into. So across the spectrum, debt mutual funds need more financial literacy to take it to consumer. I think that is the only place where this can get solved. And then I'm sure that people will put a substantial and a good sum of their money also out of their fixed deposit chunk of the debt portfolio into debt mutual funds. I see one thing, that the need to simplify it for the normal retail investor is very high, because the retail investor is got very comfortable with understanding an FD. Why? Because it has only three variables. It has tenure, it has which bank is giving me, and what is the interest rate. In general language, when we in Hindi we say that आप कौन सी बैंक मुझे कितना ब्याज दे रही है, कितने टेन्योर के, इसमें आपका पूरा अंडरस्टैंडिंग आ जाता है. When it is on debt mutual fund side, understanding mark to market, or understanding the NAV of it, or understanding the time horizon that that particular fund is going to invest in, and the securities, etc., is something that gradually will happen, and the newer generation is more keen on understanding it. So I'm very sure that there is more room for debt mutual fund to just grow in India and not get affected by just the tax change.
Do you work with, more of the larger banks, or do you also, and I'm asking this because, we've seen back in the days and even recently certain cooperative banks going down, and many people were not even aware, and in fact the limit was increased. It used to be 1 lakh, and this guarantee was increased to 5 lakh, and many people don't even know that. They presume, of course, if it's a PSU bank, you assume that the government will step in and make sure that people are paid. I mean, even though there's no written guarantee, but they will. But with a private sector bank, of course, there are good, well-known, well-capitalized banks, and then there are these small banks which are emerging and probably offering the higher return to garner more deposits. So do you sift through, make sure that, because as you rightly said earlier, risk is something which is so important. It's the first step for a person to understand. And it could be in debt, it could be in equity, it could be in any asset class. So is that something that you work very hard on, to make sure that you don't put up somebody on your platform who's just simply offering a better return?
I think that is the core of what we are trying to do, because I in fact feel that risks in debt are more binary than equity. If you invest in a stock, the stock is not going well, right? You may lose 20%, 30%, 40% of your capital. But if you have invested in a fixed deposit of a bank and the bank goes under, perhaps, or the bank is, you might want to have to lose your own capital. Of course, there is insurance, but I'm saying that it is a 0-1 game. You might have to earn 1.5%, 2% extra, but your capital might completely erode on the other side if the risk plays out. So, very conscious that what options we present to our customers need to be very well curated by us. And that is why we work only with the top institutions of India. We are not working with the smaller institutions as of now. Of course, in that parlance, we are encouraging different banks as well as corporates to come on our platform and have them list with us. However, we follow that mechanism where we say that there is a certain criteria that we have set internally, and we will only be listing them after that particular criteria. Another thing is, Vivek, that if there are small finance banks that we want to have on our platform to enable access to someone who's conscious of the risk as well, we put relevant disclosures everywhere of how much limit is this deposit applicable up to. Rather than having a sale done on our platform, we are first wanting to ensure that the customer is completely aware of the risks that they are taking with their money. So even if on our platform any deposits above 5 lakhs are done with these small finance banks, we give a disclaimer for them to sign that the insurance is there up to 5. Are you wanting to get a larger deposit done as well? To that extent, I would also admit that we are not an advisory platform and we do not advise customers. We make it still a DIY, do it yourself enabler platform for you to choose a better one. However, we are conscious of displaying all information in its entirety and correctness to the customer, because that is our responsibility.
What about, you said you're a pure online platform. What about senior citizens who are perhaps not that comfortable on 100% digital thing, and yet probably are the biggest holders of FDs and for years and don't want to step away from them. Do you foresee offering some kind of an offline support to them as well?
Yes, we do. And that is where we kind of come through, where we say that for a certain, like we have formed a senior citizen desk along with us. That's particularly for senior citizens. We are facilitating transactions at your doorstep with the ability to book a better FD. So that is something that we are actively working on. We realize that they are a large part of the whole community of investors who are inclined and have affinity towards FDs, but need to have a realization that they can do a little better and they don't need to be restricted with their own banks only. They can diversify across a few opportunities within the banking spectrum.
It's been a pleasure talking to you, Akshar. You're trying to do something really disruptive. And as you very nicely explained, you're trying to unlock this whole FD marketplace, which is a huge marketplace. I do wish you all the very best. And I look forward to many more conversations as your journey goes along to understand how we can, give the best possible to our citizens of our country. Thank you very much for joining me.
Thank you so much, Vivek. Thank you for having me and loved interaction with you.
Thank you.